Well, let's take a look at the markets where the local bourse looks set to start mixed global markets this morning, with the market somewhat subdued after a news-filled week. The JSE will need to have lost about 4.4%, almost 3,000 points to reach last week's close. Matete Thulare, head of foreign exchange execution at Rand Merchant Bank, joins us now to talk us through the latest market moves. Matete, good morning. Now, the Rand is still slightly sluggish against major currencies. Give us a sense of what is driving sentiments there.
Good morning, Hugo. It's been a really tumultuous week, and I suppose, on the Rand front, we seemingly stuck in this 16.95, 17.25 range. The Rand has been all over the show. Obviously, the key major event this past week was what happened yesterday with the central bank decision. But also prior to that, we did see foreigners selling government bonds for 7 consecutive days, the longest streak of outflows since March 2020. I mean, already we've seen foreigners selling about 14 billion rands worth of bonds since July the 12th. And I suppose also, investors have been offloading their riskier assets as global central banks obviously are hiking rates to fight inflation and the ever fears that we are having of a recession in key economies such as the US. So on the back of that, we did see the Rand this week touching highs of 17.27. The highs for this year have been 17.30, so we were about 3 cents short of 2022 highs. But overall, the year-to-date performance has seen us losing about 7% against the dollar on a year-to-date basis. And on a month-to-date basis, we are the worst performing emerging market currency, unfortunately.
Well, let's talk about that rate. Have the markets digested the rate hike at home and abroad?
So look, I suppose yesterday's, interest rate increase was on the back of the fact that it's been the fastest inflation of Lesetja Kganyago's almost 8-year tenor at the Reserve Bank. And I mean, obviously, it's not a case of how much now, but it's a question of how fast we're going to be raising rates. I mean, obviously, about 7 out of the 20 economists that were surveyed had predicted a 75% basis point hike. But also, it looks like the central bank really did surprise the financial markets by delivering the biggest increase in borrowing costs, obviously, over the past 2 decades. But I suppose also now, it marks the first time that we've seen them hiking this aggressively. But what also is interesting is the fact that out of the 5 members, 3 had voted for 75 basis points. 1 had preferred a 4 percentage point increase, and the other one had, wanted a 50 basis point increase. So it just signals that the Reserve Bank locally is looking like they want to front load the hikes and then actually start scaling back once we've got inflation under control. Now, obviously, yesterday's tone from Lesetja Kganyago was quite hawkish, and it appears that, he is stressing that the risks to inflation are obviously going to be something that we really need to be worried about. But also, this is despite lowering the economic growth forecast for the next 2 years. And, Lesetja did obviously say that his job isn't managing growth. So, this is obviously highlighting that this is the most aggressive emerging market central bank stance that we've taken. I mean, if you think about it, some of the other central banks in the emerging market space, the likes of India, on a year-to-date basis, they've hiked by about 90 basis points. The likes of Brazil have hiked by 400 basis points. So it just shows you that inflation and interest rates, that's the big I this year, obviously, as a lot of central banks are trying to put, the inflation brakes on hold.
Now, Kumba Iron says it expects its headline earnings to halve in the first half of 2022. Talk us through those numbers.
So look, I mean, they're the largest iron ore producer in the country, so they're expecting their headline earnings to halve in the first half of this year compared to a year ago due to lower iron ore prices, which is obviously due to record steel prices in many parts of the world in 2021, obviously also offset by a weaker exchange rate locally, but also they're expecting that, they're going to see about a 20% increase in the iron ore production for the second quarter following rains and obviously the equipment reliability constraints that have obviously negatively affected their operations in the previous quarter. I mean, we do know that the difference between the production and the sales obviously relates to the ongoing freight constraints with regards to the rail network issues that we've seen out at Transnet. And we've seen also that Transnet's performance over the last 12 months in particular, has been in the crosshairs of a lot of South African coal mining firms. And obviously on the back of even the Eastern European geopolitical tension, we've seen coal prices rally quite hard, and we would have thought that we'd take advantage of that, but we have seen that has impacted a lot of the coal mining companies. So, the Kumba Iron Ore is set to obviously say, look, we need to sort out these issues at Transnet. The country at this point in time is set to deliver about 56 metric tons of coal, which is below the 58 metric tons of coal that we actually achieved last year in exporting to the rest of the world, which obviously highlights an underperformance. So the lower the freight rates obviously are also related to copper cable theft and obviously the low availability of locomotives out at Transnet. But obviously, as we say, we really need to make sure that we obviously solve some of these bottlenecks and obviously increase the production, and I think that will also bode well for the country and also the revenue tax base as well.
Matete, our final look. Gumtree South Africa has been bought out by Durban-based Impressor Capital. What do we know about this deal?
So Gumtree, obviously, it started to be South Africa's biggest online classified advertising and community website. This marks the first time in 18 years where, we've got South Africa's biggest online website, obviously now being back in the hands of South African owners. Remember that this was launched in 2004, and it remains one of the country's top 10 favorite websites. And obviously, the deal has been done for an undisclosed amount, where the South African private venture capitalists bought it from Norway-based Avienta. It is still obviously subject to final regulatory approvals from the competition authorities. As always, we need to make sure that we're following and obviously towing the line. But the deal has special significance for us as South Africans because, it was obviously something that we had before, and obviously now this deal also involves the purchase of the operations locally and also the branding in South Africa, as well as an agreement that allows for the expansion of the brand into the rest of Africa. And I think that bodes well for expansion and obviously for South African companies to actually, be on the front foot in terms of expanding into the rest of Africa.
Matete Thulare, Head of Foreign Exchange Execution at RMB, thank you so much for your time this morning. He was giving us a rundown of the markets this morning.